how fast the indicator is going to react to price change. Most of us will probably be chopped to pieces if we rely on only a short-term trading indicator as the basis for any trading system. The MACD line is faster than the signal line, and it's the result of the difference between the fast and the slow moving average. Many traders will use the line as a proxy for momentum. But to make it simpler, think of it as measuring the rate of change of price. The signal line in the MACD is slower due to its setting, and traders will often use that as a trend determination tool, either using multiple time frames or just one trading chart. And knowing that we measure trend and momentum, you may already see how we can use the MACD to actually trade with when we use both the MACD line and the signal line to alert us to possible changes in the market. The two-line cross can be a powerful indicator of trading potential in the market. Here, we've set up the indicator on our chart. And we're going to use the standard settings as we talked about earlier. And we're going to read the MACD. When we want to determine trend direction via the MACD, we can look at where the MACD line is in relation to the signal line. If the MACD line is below, in between the red lines on the chart, we're looking for a short trade. If we see the MACD line is above the signal line, between the green line, this is going to indicate a market in an uptrend, and you'd be bullish on any trading setup. And as mentioned, we're really looking at the rate of change of price. So even though the lines are crossed, price may be compressing. This is one reason that multiple time frame trading is suitable for this trading indicator. You simply look to short rallies during a MACD downtrend and buy pullbacks during an uptrend. And some traders will use the MACD signal line crossovers to buy or sell the market. You may want to consider other variables such as price structure, multiple time frame considerations, and price action in conjunction with trading a simple cross. Once the MACD line crosses over the signal line to the downside, that would be bearish, and you could use that as a signal. Conversely, if the MACD line crosses to the upside, you'd be bullish, and you can use that as a buy signal. And we talked about the fast line being a proxy for momentum, and there may be times where we will not want to wait for a complete crossover of the MACD to take a trade. So I want to draw your attention to the black round circle at the top of the chart. Here's a pin bar, and it formed after a run-up in price. Also notice the separation in the MACD indicator as price approaches the region, in the same region of previous resistance that's not really seen on this chart. And it shows decent momentum in this market. We see the separation decreasing as price slows down and then explodes to the upside, but closes on its open as seen on the pin bar. This is bearish. Now bring your eyes to the fast line of the MACD, and you can see it hooked to the downside. Given the context of price action and structure, you could gain an early entry into a possible reversal. Depending on the context of the chart, you can use the fast line hook as a buy signal or a sell signal. These can be used to enter the market or as a profit-taking indicator, but doesn't matter. Well, this is a weekly chart, and you would have entered 5 or 6 bars earlier, and you've been up over 120 pips before that breakdown happened. What about divergence? I'm not going to talk about divergence, simply because this all takes into account price action and structure. And I find the normal teachings about divergence has way too many holes, because if you trade just the indicator, you're setting yourself up for a failure. Another way that we can use this indicator is to take advantage of the zero line and the fast line as a means of trade entry. Again, keep in mind the lagging nature of all indicators with this trading method, and highly consider using multiple time frames for your trading. You can see the change in trend when during the moving average crossover, so we know we're looking for a short trade. Once the fast line crosses the zero line, this could be a trade entry. You can see how mechanical this is, but it also gets you in very late in the move. You can see on the inset on this graphic that this is the daily chart, and the red line indicates where, after the weekly trend turns down, you would enter on the daily chart using the zero line cross. That black line is where you'd enter on the weekly chart 2 months later. So in summary, with the MACD, we do have a useful technical analysis tool. It has quite a few uses, and we talked about how to determine the trend using the 2-line cross, how to read momentum using the fast line, trade entry using a fast line hook, trade entry using a zero line cross, the benefits of multiple time frame analysis. And as with all technical indicators, you want to test this as part of an overall trading plan. Also, be aware of the lag time using this indicator, although for some traders, it'll be an advantage as you're not picking tops and the bottoms. You may also want to experiment, as with any moving averages, consolidation plays, and the 2 lines of the MACD converge. When this happens, price is usually in a range, setting up a possible breakout trade. So test, back test, forward test, and you might just find the value of the MACD in your own trading process.